Looking ahead, challenges and opportunities in the changing world. Welcome to Talking Economics, a podcast by the Center for Economic Research and Graduate Education, Economics Institute. Monetary and fiscal policy, the main macroeconomic tools used to steer our economies. How are they able to address the unprecedented challenges presented by the events of recent years, such as the COVID-19 pandemic, war on Ukraine, or increase in energy prices? How do these policies of governments and the central banks interact? What does it mean for us now and in the future? Let us have a macroeconomic look at the current economy with one of the leading Czech macroeconomists, CERGE-EI alumnus Jaroslav Borovička, who is an associate professor at the Department of Economics at New York University in the United States. Welcome, Jaroslav.
Thank you very much for having me.
I would start with the general interplay between the fiscal and monetary policy. Can you give us a brief overview of how these policies interact?
So the way how we understand how fiscal and monetary policy interact or work together is from the perspective of the central bank being really just an integral part of the government. Right? So on the one hand, the government conducts fiscal policy through taxes and redistribution and government expenditures. On the other hand, it also conducts monetary policy via central banks that modern governments established. Right? But when we think about the government as a whole broadly, then the government needs to pay for expenditures. How does it do it? It does it through raising taxes and through issuing of new money that they can use to pay for the expenditures. Right? And traditionally, governments have used both tools to pay for expenditures, but soon they realized that when they just use newly issued money to pay for what they need to pay for, they end up with higher inflation. And so over time, and especially with the establishment of fiat money, they decided to make central banks more independent. And so that central banks really care only about stabilizing inflation or stabilizing prices. They would use monetary policy to, say, help stabilize the business cycle. And the government cannot force the central bank to issue new money to pay for deficits. So the government is forced to raise enough tax revenue. In monetary theory, we call this regime where the central bank is independently conducts monetary policy, the so-called monetary dominance regime, where the central bank only cares about money issuance and fiscal policy has to passively adapt to that and raise enough tax revenue to cover expenditures. And this has worked for us for many decades. Although over the history, of course, these two regimes were fluctuating in terms of their importance. Right? So we had periods when the government was trying to force central banks to adapt to higher fiscal expenditures by issuing more money. And the worry now is that perhaps we are now at a stage where this period again re-emerged, and the governments across the world facing really high expenditures connected to the global pandemic and to other ways or facing other reasons for higher fiscal expenditures like aging and etc. Facing issues with green economy, they might be tempted to take away some of the dependence of the central banks and force central banks to participate in paying for these government expenditures.
Mm-hmm. We are facing this soaring inflation in scale we haven't seen for 30 years, right, since the transition. So can you maybe speak about the inflation and then how these policies interplay in the Czech Republic?
Yeah, it's a big issue also from the global perspective, because the whole developed world faced very high fiscal expenditures connected to the pandemic, and so did the Czech Republic. And when you think about the situation, this is really unprecedented. not even looking back at, say, like the financial crisis from the years 2007 to 2009, we've seen anything comparable. During 2007-2009, when we think about, say, not directly the Czech Republic, but when we think about the Eurozone and the US, there in those countries, central banks engaged in substantial monetary experiments in the form of quantitative easing, but none of that was really the kind of money issuance that we are perhaps seeing now. Because when we think about those periods, like what the central banks did during the financial crisis with the quantitative easing, they did not issue new unbacked money. They used new unbacked money, or they used new money to buy assets from private entities. And so and how they paid for these assets, they paid in the form of reserves, and the reserves ended up at the reserve accounts of the private banks with the central banks, but they never made it to circulation. Right, so this money was never transferred to the hands of the people to be spent, and in the moment when, for instance, the Fed realized that the economy is picking up, and perhaps central bank or perhaps the private banks would be tempted to use the money to, say, provide loans and so on. They were able to start paying interest on these reserves, so that this money was never really transferred to households. Moreover, there was always the understanding that this was a reversible operation. Right, so the central banks issued massive amounts of reserves, but at the same time they had a portfolio of assets that were backing these reserves. So in the moment when there was, in the moment when inflation would come, they could always reverse the operation, right, by selling the assets and withdrawing the reserves. So as long as the assets had sufficient value, this could easily be a non-inflationary situation. This has dramatically changed during the pandemic, where this massive monetary expansion surprisingly did not come from the central banks, but came from the government itself, where the governments across the world decided to massively subsidize people's budgets or households' budgets by transferring large amounts of money directly to them. And households did not have ways how to spend these resources, so they started accumulating these balances. So after the pandemic subsided, they ended up with very large cash balances sitting either on their accounts, sitting on their accounts.
Mm-hmm. So the inflation is mainly caused, according to you, by these excess budgets, and probably on the other side of supply. Are there issues also on the other side of supply, or? So
this is a very hard thing to disentangle, right? So because many things have changed at the same time, right? So many people raise the issue of the various disruptions in the supply chains, and clearly this contributes to raising prices. Right, so when production becomes more expensive, clearly the cost of goods the increased cost of goods have to be passed on the consumers. But one thing that we have to understand is that this understanding of increased cost of goods contributing to higher prices of those goods for final consumers is a statement about relative prices, right? So if a good is harder to produce, right, then it should be more expensive relative to the good whose production cost did not increase. But it does not implicitly say anything about the overall price level, right? Because how much all these goods would cost in units of Czech crowns or dollars or euros, it's quite a different question. Right, so we could easily imagine that one path that the economy could have followed was one where the nominal prices of goods which are harder to produce, which are subject to this disruption, would increase. Nominal prices of other goods would decrease. Nominal wages would decrease, and we would end up with stable inflation and just differences in nominal prices. Now, of course, this is pure theory. This is pure theory. In practice, this is hard to achieve because of well-known reasons. We know that prices and wages are much more sticky downward than upward, right? So it's easier to increase wages than to decrease them, right? So obviously there is an aspect of why we must have seen at least some temporary increase in prices, right? But definitely the way how the government handled the whole situation contributed to the fact that the overall price level increased substantially more than it would have increased without the supports, right? And the main reason simply was that governments distributed these cash balances to households. We have a very good understanding of what households typically do when they actually receive new cash balances. We know that many households simply do not save these cash balances and start spending them as quickly as possible. And so it's not surprising that this increased demand for goods coming from households having these cash balances contributed to the increase in the overall price level.
And so what about the current situation with the war in Ukraine? This is pushing the energy prices again to unprecedented levels, and the governments are again talking about additional funding for people who are falling into poverty. The unions are calling for increases in wages because people are going to suffer from the higher prices and the inflation. So what do you think about this, and how does it fall into the picture?
Yeah, so I think if we are looking for solutions, and clearly these solutions are not easy, right? So they will be costly. We have to first realize that when energy prices increase, when energy becomes scarcer for us, and we are not an energy producing country, right? Or if prices of goods that we import increase because of disruptions somewhere else or because of increased demand in some other parts of the world, we are simply becoming poorer as a whole, right? And this is something that we have to first accept, right? And why is it important? It's important because fiscal and monetary policy can do things like redistribute income from, say, households that are well off to households that are poorer or that are currently facing troubles. Monetary policy can help smooth out business cycles by controlling interest rates, etc. Right? But overall, fiscal and monetary policy cannot permanently stimulate our economy out of the situation where we simply face higher costs of goods that we import, right? Mm-hmm. So once we acknowledge this also will better help us understand what potential solutions can actually work, right? So trying to endlessly stimulate the economy, say through across the board fiscal expenditures or across the board tax cuts, will probably not help and will only lead to more inflation. Mm-hmm. What makes sense, of course, is that in a situation where some households are clearly affected relatively more relative to their incomes through the increased energy prices, the government can help redistribute, say, through targeted subsidies to specific households or to poorer households. Similarly, monetary policy has to think carefully about to which extent they can really run a more expensive monetary policy to help the economy, because and that is also closely related to the current debate about what the Czech National Bank is doing.
Before we go to the monetary policy in more detail, what the government is doing now is really expanding its support, right? And the deficits are running to extremely high numbers. So how do you see the future of these deficits, or who is going to pay the bills in the end?
Well, yeah. So ultimately, it has to be. It can be three groups. It can be either the future taxpayers, right, who will have to deal with paying off the increased debt. It can be savers if the central bank through expansive monetary policy or more expansionary monetary policy essentially monetizes these expenditures. Or ultimately, and that would be the worst case scenario, it could be bondholders in a situation which right now is very, very unlikely, in a situation where the government decides to default on the debt. Right now, of course, this is I'm mentioning that just so that we have the complete picture. I do not want to say in any way that right now we are facing some short-term issues with the stability of the government. That not at all. But longer term, we of course have to also understand that we are not only facing the current situation where the current large fiscal deficits keep stimulating the economy, keep making the fight against inflation harder for the central bank, but also what happens in the longer run with the stability of the government budget, because we know that more in the recent years. The government in the Czech Republic engaged in a series of steps that really did not look like a longer term plan for fiscal stability. Like cutting taxes without having ways how to cut expenditures correspondingly, or without even thinking about like how the longer term fiscal outlook looks like. So that's really something that, like, once this inflation wave is hopefully fought off, is something that we will have to come back to and think about the issues of fiscal stability again.
Once the inflation is over, the Czech National Bank is the main firefighter in this one. What do you think about their how they take on the challenge of fighting the inflation? What do you think about their work?
Yeah, so the Czech National Bank is really in a very complicated position, because the inflation itself was primarily, like the current inflation wave was not primarily caused by some monetary action of the central bank. It's really a combination of like the increase in the import prices and right now like the energy prices, and fiscal policy which mimicked what like monetary economists like to call helicopter drops that Milton Friedman and Ben Bernanke described. Situations where at least like in the past, theoretically, central banks could help increase inflation in situations where they needed to increase inflation by just distributing money freely across people, right? So that was a theoretical concept. Like, of course, the Czech National Bank was never allowed to do something like that, but in the past 2 years, this is exactly what the government, or what the Ministry of Finance, the government in the narrow sense, actually did through fiscal transfers. It was this unprecedented transfer of cash balances to households. So that definitely contributed to these inflationary pressures. And now, so what can the central bank in this situation do? and specifically Czech National Bank. Well, the situation is complicated because the government issued these cash balances, so did this increase the amount of money in the economy, but it's something that the Czech National Bank can control only indirectly, right? Mm-hmm. The Czech National Bank is not allowed to tax these balances or withdraw them in any way. So what can the central bank do? Well, it can react either by increasing interest rates, or in the case of the Czech National Bank, by using their other powerful tool, and that is the international reserves, which the central bank accumulated. Now, when we look at what the Czech National Bank did in this very complicated situation, which really was caused by somebody else, I think that the Czech National Bank acted really boldly initially with the interest rate policy, and acted correctly, and that was definitely a step in the right direction. Now, perhaps a bit surprisingly, the Czech National Bank did not use the international reserve portfolio in any substantial way. And what could have helped, and that's something that perhaps should have been formulated already before pandemic, right after the interventions or the currency interventions that happened between 2013 and 2017 were ended. At that point, the central bank ended up with a massive international reserve portfolio, which was much larger than what would have been optimal. And so the central bank could have formulated a clearly communicated strategy of how we actually start selling off this portfolio. Right? And by selling off this portfolio, we increase the demand for Czech crowns because the central bank would like to buy these Czech crowns back by selling euros, and that would create a path toward steady appreciation of the Czech currency. Now, of course, again, details matter, but in principle, this would have been a very meaningful thing to do, and this could have helped alleviate some of these foreign pressures related to increased inflation, because the appreciation would actually reduce the inflationary pressures from abroad.
But the Czech National Bank is very hesitant to be using this tool, right? They're strictly relying on the interest rates.
Yes.
Can you explain that?
Yeah. So except the last couple of months where they had to use interventions to defend the exchange rate, after this series of various steps, which we can discuss in detail, besides this, indeed, it seems that they are reluctant to do that, and to me, it is surprising, since the central bank does have such a powerful tool. It could have used it, and it could have served two purposes. I mean, first, right now, it could have helped alleviate some of these inflationary pressures to some extent, of course, never completely. And to the other extent, it would help reduce the international reserve portfolio to a more meaningful level, because having a portfolio that is too large also exposes the central bank to risks associated with this portfolio, both coming from exchange rate risk as well as from investment risk. Right, so and the central bank is not in the position to play the role of a hedge fund. So this is something that that is indeed surprising to me. Why the central bank hasn't done that, or at least in this situation, there was another good reason why to introduce something like that and clearly communicate a policy like that. Hasn't happened yet. So let's see.
I think their main policy, we had the podcast with Dana Hajková from the Czech National Bank, and it seems to be their main tool. They're relying on the interest rates. Do you think that it's working as good as it could, or?
So I think it is, from everything we know about how monetary policy should be conducted, this is the right thing to do. Now, whether it's working, so in the sense that we can clearly see in the data the effects of this. I think we do start seeing this, say, in prices of real estate, right? Where the real estate prices where the increases in the real estate prices slow down because of the increase of the interest rates on mortgages. Whether we see it already in the goods prices or prices of services, this is a much harder thing to do. Empirically, we know that the lag between implementation of such a policy and the realized effect can be a year or a little bit more. Right, so perhaps it's too early to see effects like that directly in the price level, and definitely if we wanted to really measure something like that in a sophisticated manner, this is extremely hard now because prices for various reasons are fluctuating all over the place, right? So, and a formal econometric analysis of such an effect would, I think, we would not be able to immediately find evidence.
Would some international comparison be helpful, comparing it to other countries?
So I think one piece of international comparison is say what happened to and I think this is a good place to look at is say the exchange rates, right? Because we have clearly seen that after the COVID wave, the Czech koruna remained stable and actually appreciated somewhat relative to where it was 2 years ago. And this can be meaningfully attributed to the increased interest rates. And of course, once you start appreciating the currency, this has to be ultimately this will be transferred through into lower import prices, right? So that definitely helps. So I think looking at the exchange rate is a signal that the policy of credibly raising interest rates and meaningfully fighting inflation actually is reflected. This is where we see it.
We're talking about exchange rate, we are talking about the monetary policy and raising the interest rates. This is all possible because we don't have the euro. So what about adopting the euro? Do you think that the current situation has shifted the arguments for and against in any way?
So I think, of course, like every development does provide new arguments with that shift the debate slightly more in favor or against. But I think one important thing to understand is that whether we adopt the euro or not will probably have small effects on the small overall effects on the economy. So definitely we cannot expect any effects of the size that we experienced when we joined the European Union, right? So adopting a common currency does have some benefits, does have some costs, but they are incomparably smaller to, say, the EU membership. Right? And this is why it's also so hard to actually evaluate the costs and benefits, right? Because on the side you have benefits that we understand come from the fact that you do not pay transaction costs, you are not exposed to exchange rate risk, etc. Right? So that's a steady flow of some benefits that every year we can accrue. On the other hand, the loss of independent monetary policy comes with a cost that is very time varying. That can be very low in times when the Czech Republic behaves in a stable manner and the Eurozone behaves in a stable manner, and can be very high in moments when actually the two blocks, or the Czech Republic and the Eurozone, kind of get out of sync, right? So and the question now is in which situation we are. Right, so clearly, what is important to mention is that in order for the independent currency like the Czech crown to operate well, we need to have a credible and committed central bank. Right? And the question is whether the recent changes in the leadership of the Czech National Bank really actually support this thesis. Right? So we would hope that things will go well, but I think that the recent months have clearly shown that this uncertainty does exist. On the other hand, we also have to see that Eurozone itself is also not necessarily a super stable bloc, and will need to address longer term issues that are connected to like large differences in fiscal positions between the southern countries and the northern countries. Right? And that's something that in the longer term the Eurozone will have to debate, and we do see these issues already creeping into the decision making of the ECB, where the ECB is really trying to like reinterpret their mandate in a way that would allow more help and more support to countries that are in more fiscal trouble, much more than what we would have ever imagined when we wrote the law the ECB articles back 20 years back. Right, 20 years ago, we would have never imagined that the ECB today would interpret those articles with such leeway.
To a large extent, it's a question of homogeneity, right, or convergence. And the question is, to what extent has Czech Republic converged enough to the countries of the Eurozone, which are heterogeneous enough, right? So do you think that we are close enough to the EU markets so that the euro would kind of make sense, or the dangers are still there?
So I think definitely like the convergence like progresses, right? So like one aspect of the convergence are simply differences in the well-being, in the incomes, right, or in GDP, right? And we see convergence in those measures. So that is one step. I mean, the other aspect is convergence to which countries in the Eurozone are we talking about, right? So are we talking about convergence to, say, Germany, Austria, Belgium, Netherlands, or are we talking about convergence to Italy, right? So that's a very different question. So I think there we would definitely like ourselves to be like in the northern group with relatively more stable fiscal outlooks, at least so far. And the third aspect that should not be underestimated is simply composition of or the structure of the economy, right? And there the big risk for the Czech Republic is that it's very dependent on like the car manufacturing sector, right? So in the moment when the car manufacturing sector gets into trouble, we will be hit much more severely than the remaining Eurozone countries, and probably we would need a more relaxed, more accommodative policy for to get us through. But I think that as I mentioned before, I think that overall the debate about whether to adopt the euro or not should not be so much economic, but perhaps more political. Right? Like, do we feel like we want to play together with the Eurozone countries and share the risks and perhaps help address these issues like within the Eurozone? Or do we feel like we want to stay more outside or like at the boundary of the Eurozone region? Right? So ultimately these considerations should play some role as well.
Mm-hmm. Excellent. So would you like to say something to conclude, to summarize our talk?
So I think one good thing to remember in the discussion of both fiscal policy and monetary policy, and like what the central bank should do now and what the fiscal side should do now, or like should we now start taxing specific industries because there was like a sudden shock, like we are like now having a discussion like in the Czech Republic. Like one thing we should always keep in mind is that this is that both fiscal and monetary policy are longer term games. Right, that like when monetary when the Czech or when the central bank, like the Czech National Bank, engages in a particular policy, it builds reputation, and reputation is important for a stable environment and for more credible policies. And the same thing is true about fiscal policy, right? So when the Ministry of Finance or the government in the narrow sense starts deciding on like sudden introduction of new taxes or sudden cuts of new taxes that are really surprises, right? Through these actions, it builds or undoes reputation, right? And stable environment on the fiscal side is equally important for investment decisions. Like for example, in the context of like the energy crisis, when we think about a stable environment, say for building new resources or new sources of energy, right? So these are investment decisions that will last for many decades, right? So the investment planning horizon is extremely long. And so having a stable outlook for how actually, like in what environment these investors will operate and these firms and businesses and how households will operate is super important for how they ultimately behave, right? So often don't get lost in like the everyday or like in the day-to-day changes and think about the longer term outlook.
That was an excellent macroeconomic conclusion. Thank you very much, definitely, for being here.
Thank you very much for inviting me.